Military assets are moving toward Iran as I record this. We're seeing 3 carrier strike groups repositioning. Satellite imagery is showing unprecedented activity at nuclear facilities. And right now, silver is coiled at a decision point that will either explode it to $85 or collapse it to $60. The next 72 hours will define precious metals for the entire year. This isn't just mainstream speculation. This is happening right now, in real time. What I'm about to reveal is what the financial media won't touch until prices have already made their move. So here's exactly what's unfolding and what it means for your stack. If you've been tracking geopolitical risk on this channel, you understand something 99% of investors completely miss. Silver isn't just a precious metal, it's a war barometer. Every single major Middle East conflict in the last 3 decades triggered violent silver moves before traditional markets even flinched. The Gulf War, the Iraq invasion, the Syrian escalation. Each and every time, silver signaled what was coming while Wall Street was fast asleep. And here is why Iran changes absolutely everything. The Strait of Hormuz controls 20% of the entire global oil flow. Any disruption sends energy prices vertical, which simultaneously crushes industrial demand while igniting a massive safe haven panic. These forces pull silver in opposite directions with equal ferocity. Right now, we are approaching the exact inflection point where one of these forces is about to overwhelm the other. The question isn't whether silver moves big. That's already guaranteed. The real question is which direction breaks first. And the signals from this week are screaming. Here's what just surfaced that the mainstream media completely missed. Pentagon sources confirmed a 3rd carrier strike group was deployed to the Mediterranean yesterday. This was buried in paragraph 15 of a Reuters article that nobody read. At the same time, Israeli defense officials held emergency meetings with American military commanders for 3 consecutive days running. No statements, no press conferences, a complete media blackout. The options market already sees what's coming. Silver calls at $80, saw volume explode 400% above average. But here's the twist. Puts at $60, spiked almost as hard. Smart money isn't betting on a direction anymore. They're betting on magnitude. They know something massive is approaching, and they're hedging both outcomes aggressively. The COMEX positioning reveals another layer to this. Commercial traders, the big banks, just added their largest short position in 11 months. Meanwhile, managed money went aggressively long. This exact divergence has preceded every violent silver move in the past decade. Somebody's about to be catastrophically wrong, and somebody's about to make generational wealth. The gold to silver ratio currently sits at 78. During the 2020 panic, it spiked to 120 before silver exploded. During the 2011 tensions, it compressed all the way down to 32. This ratio is coiling for an explosive move. Now here's what nobody else is connecting, and this changes everything. While the financial media is obsessed with earnings reports, smart money is tracking something far more dangerous. Let me connect the dots they desperately don't want you to connect. Iran isn't just about oil. It's about silver's industrial backbone. Iran supplies critical components for semiconductor manufacturing across Asia. Any military escalation disrupts the supply chains that feed over 50% of silver's annual industrial demand. So here's the scenario that nobody is discussing. A strike doesn't just trigger safe haven buying. It could simultaneously threaten the industrial demand that supports silver's entire price floor. This creates an impossible equation. Silver could spike on fear and then collapse on demand destruction. Or the complete opposite could happen. The oil variable matters more than anyone admits. If Hormuz closes even temporarily, oil could hit $200 a barrel. Energy-intensive mining operations in places like Mexico and Peru would face immediate cost explosions. Supply would contract. Prices would have to rise, regardless of fundamentals. But there's a darker path. If there are just surgical strikes without significant retaliation, the fear premium could evaporate overnight. In that case, silver would dump toward its 200-day moving average. So what does this binary setup actually mean for your stack? Let's walk through the scenarios. Scenario 1. Military escalation accelerates rapidly. Strikes expand beyond just nuclear facilities. Iran retaliates through its proxies or directly threatens Hormuz. Oil explodes past $200. Inflation fears reignite globally. In this case, silver catches the full safe haven bid alongside gold and rockets to $85 within weeks. Physical premiums become irrelevant because all available inventory simply disappears. Scenario 2. A surgical strike is followed by diplomatic containment. An initial fear spike pushes silver towards $75. Then, we see rapid profit-taking as tensions ease. Silver retraces all the way back to $60 within 30 days. Paper traders get destroyed on both sides of that vicious whipsaw. Scenario 3. Prolonged uncertainty without any real resolution. This is actually the most bullish scenario in the medium term. An elevated fear premium persists for months. Industrial users accelerate their inventory building to get ahead of disruptions. central banks continue their quiet accumulation. Silver would grind steadily higher towards $75 or more over 6 months, rather than spiking and crashing. The window to position yourself before a resolution emerges is measured in days, possibly even hours. Dealer premiums are already expanding as we speak. This brings up the critical question: how do you actually navigate this? Now, I don't give financial advice. Every decision remains yours and yours alone. But here's the framework I'm personally applying right now. Binary outcomes demand binary preparation. Physical silver protects you in the upside explosion scenario completely. But cash reserves protect your ability to buy any correction aggressively. Both positions matter. If you're fully allocated, don't chase headlines with leverage. If you're underweight and waiting for clarity, understand this very clearly. Clarity arrives after the prices move, never before. Here's your watch list for the coming days: Pentagon deployment updates, Israeli cabinet emergency sessions, shifts in options volume, changes in dealer premiums, and the Shanghai overnight pricing. These will reveal which scenario is materializing before the mainstream reports anything at all. A critical warning: emotional reactions during geopolitical chaos destroy portfolios faster than any external event. Smart money stays calm, stays prepared, and stays positioned for multiple outcomes. You have information ahead of the crowd. Use it strategically. What we're witnessing transcends Iran or even silver prices. It's a global monetary system fracturing under geopolitical pressure in real time. Most investors will understand what's happening 6 months from now, when it's far too late. This community understands today. That's why we share what we find and we prepare together. Drop your prediction in the comments, 85 or 61st. I read every single comment. I'm monitoring the situation overnight and will report back immediately if anything breaks. Subscribe with notifications on, because when this escalates, you need to know first. Hit that like button if this prepared you. This is John Funds AG. Stay sharp, and I'll see you in the next one.
Quick disclaimer: this video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.